everyone, this is Tim. Today I'm going to be going over a new stock that a person let me know about in the comments below in my previous video. So I thought I would do some research on it, and it actually looks like a pretty good stock. It is a more expensive stock than one of the ones I've gone through before at $180.23 per share, but it does have an interesting business model. It is a REIT, but it specializes in an interesting sector of commerce and medicine, and I'll go over into more details later in the video. I'm going to be going over the dividend information, their financials, and if they have any good options or if it's just worth getting it for the dividend if you decide to. This is not financial advice, and I'm not telling you what to invest in. This is just information you can use to decide with proper research of your own if you want to invest in the stock or not. I hope you enjoy this video, and don't forget to hit the like and subscribe button down below. It does greatly help out my channel grow, and I hope you have a great day. The company is Innovative Industrial Properties Inc., ticker symbol IIPR. It is currently trading for $180.23. And it has a dividend yield of 2.93% or $5.28 per share per year. It is currently doing fairly well. For the last year, it's up 110.11%. Over the year to date, it is down 1.58%. Over the last 6 months, it is up 14.95%. Over the last month, it is down 2.48%, and over the last week, it is up 4.17%. Innovative Industrial Properties Inc. is a self-advised Maryland corporation focused on the acquisition, ownership, and management of specialized properties leased to experienced state-licensed operators for their regulated medical use cannabis facilities. Innovative Industrial Properties Inc. is elected to be a taxed as a real estate investment trust, commencing with the year ending December 31st, 2017. It is an industrial REIT, has 16 employees, was founded in 2016, and is headquartered in California. So this stock has a payout ratio of 81.88%. They have grown their dividend over the last 3 years. They pay $1.32 per share quarterly to bring it to the $5.28 per share yearly. Their last ex-dividend date was on March 30th with a payout date of April 15th. So that means their next ex-dividend date is not going to be until June, which is going to be coming up tomorrow this is May 31st, 2021 when this is being recorded. Now to go over their financials, for their rental revenue, it went from $0.3 million or else $300,000 in December 2016 to $116.9 million in December 2020, and over the trailing 12 months, they're at $138.7 million. Their total revenues have increased substantially over the last 5 years. Their expenses have also gone up. Their expenses in December 2016 was $0.1 million, up to $5 million as of December 2020. And so their operating income is $69.7 million. And they had net interest expenses of negative $4 million, bringing their earnings from continuing operations to $65.7 million. And then after dividends and other adjustments of $1.9 million, they have a net income total for December 2020 of $63.9 million, which is up from actually being down $7.5 million in December 2016. So looking at the options for this stock, they do have a fairly high premium considering the price of the stock and everything else. So for instance, if you were looking to buy 100 shares of this stock for the dividend, after your research you believe in this company, then for instance you could either buy at the money for $180 per share, which keep in mind that is you would have to buy and have collateral for 100 shares, so you would have to put $18,000 as collateral, but you would be paid $565. And That would be you agreeing to buy 100 shares at $180 for that premium. Now you could go down to $175 and you would be paid $3.45 per share, or $345 total for 100 shares. And that is a little bit safer. If you want to be even more safer and be around the 80% mark or a 0.3 delta, you could go down to $170 strike price and get $203. Your premium does go down, but it depends on if you want to buy the stock but at a cheaper price and still receive premium. And then once you do have it, you can make sure that you keep it during the ex-dividend date and then do an option for it to sell a call. So for instance, if you were to sell a call right now, you could sell for several $100s also. But you also have to, like I said, take into account the ex-dividend date, just in case the price of the stock were to go above your strike price. They would most likely be called away early due to the dividend payout. So if you were to do that, I would recommend selling a call after the ex-dividend date. That way, even if it does rise and you goes above the stock price, you most likely wouldn't be called away early because the dividend date had already passed. So you would most likely be able to at least have more time to see if the stock price changed at that point. But that is completely up to you. That is just my advice. I do not recommend doing anything like a poor man's covered call. And the reason for that is, since it is monthly, you could, for instance, buy a call that's way in the money at something like a 0.7 or 0.8 delta, just to be safe. For instance, the $135 strike price is at a 0.8 delta, which if you're doing a poor man's covered call is basically the same as having 80 shares, or the leverage of having 80 shares. And you would be able to get that for, instead of 18,000, you'd be able to get that for 5,740. And so then you could also negate a little bit of that by selling a call that's higher than the strike price. I would do something a little bit safer, like at the $195 to $200 strike price range, and that would lower your cost basis just a little bit. But I don't think that this would be a good candidate for a poor man's covered call, just because since it does trade monthly, at paying 5,000, even say $5,600, $5,500 for the poor man's covered call, the buying the call deep in the money, you would not have enough time and enough premium to make that up before the expiration date. So the stock would have to rise considerably for you not to lose money doing a poor man's covered call on this particular stock at this time. Now, if you choose to, that's completely up to you. This again is just my opinion and it is not financial advice. Thank you for watching, and I hope you found it informative and helpful. And don't forget to hit the like and subscribe button down below if you've made it this far. And again, I hope you have a great day and stay safe.